All right, ladies and gentlemen, I hope you're having a wonderful weekend. I want to talk about something a little bit different here, and it has to do with the specific stock Apple. I don't know if you guys have seen what I've seen, but it seems like the stock is going crazy. So I've outlined a few things, and you can even see here all the news articles. First, the Goldman, then the CEO, then this Apple TV, then this MacBook 11 Pro, 12, 13, whatever. But honestly, there's a lot of implications, so I want to talk about what this all means, and it's going to give me an opportunity to talk about stuff, everything from fundamental, how we're looking at a long-term stock, and I think you guys will learn from this. And I'm going to try to make this as quick as possible, straight to the point, and get you guys what you need. So let's get into it. Make sure you like the video, make sure you subscribe, and we're live Monday through Friday, 30 minutes before open. But right off the bat, the first thing I want to talk about is Goldman's price target cut and the rebuttal that came out today. That is huge. So Goldman Sachs came out and they said their price target for Apple, they're dropping it by about 25% in the next year because they think that it's going to come down because of this Apple TV Plus. Apple came back in a statement to CNBC. They came back, they said not really, they don't expect it to have a material impact on their financials, when Goldman said the free trial is going to do the contrary. And this is huge because them saying it's going to be non-material, it's telling us about their margins, it's essentially giving us guidance, and it's letting us know even to these future plans, which I'm going to talk about, and it has to do with what they're doing with the service sector, so we're going to get to that. But the fact that they're saying it's non-material is kind of all it has is upside. They might make a lot of money for it. It might lead to a lot of acquisitions and users on this platform. And they're saying it's not going to cost us anything, nothing that'll even affect their margins, but they're introducing a new service that's like coming out with any of these new services, and the fact that it's not going to take anything extra away, I think that's huge, and I think that's a good reason why the stock went up today after that news came out, because obviously it came down after we saw what happened with Goldman here throughout the day. You know, it still closed down 2%, but that was still big. Moving on, the next big thing that I think that needs to be highlighted, they cut guidance in 2019, and they've gone up 50% since then. So again, there's still other pieces of news we're going to talk about here, and a lot of stuff happening, but I think we cannot forget what happened in the beginning of the year. If you guys remember, it was right around here. I think it was literally the first day of 2019. They cut their guidance. Stock was at $143. It is trading now at $218. That is over a 50% increase since cutting guidance. This is huge. This is letting us know the sentiment and how things are. But then this also is going to lead to the next big thing that I like. Wrong tab right there. But last time that we thought that the growth peaked on Apple, they went up 100%. And now this is where I want to talk about buybacks. But this is what I'm referring to around 2015, 2016, but mainly middle of 2015. Again, this is kind of even how the overall market looked, but even late 2015, people thought the growth story for Apple was pretty much over, especially in 2017 too. But then it seems like Apple just kept going up higher and higher, even related to what we're saying right now. How in the world did they cut guidance in 2019, say they're going to do bad? A lot of first-time evers have came out on this year, and this is what I'm saying. All of this news for Apple stock is going crazy, but the stock keeps going up, and this is where it relates to buybacks. I think you guys could see here, well, if you're not familiar, you could even look at this through the filing. So take a look here. As far as 2019 goes, you come to their filings. Here's the 10Q. We will show you the 10K, but you could go to any of these filings and see literally earnings per share, but under the share is shares used in computing the earnings per share. It was literally telling you how many shares exist right up here in millions except number of shares. So it's reflected in thousands. So literally just add 3 more zeros. So right here, it's saying 4.570 million shares, add 3 more zeros, you're at 4.5 billion shares. Basic is literally basic shares that are available. Diluted is when you include all of the insider shares and people holding options, right to buys, all that within the company, not within the options chain. But here's the key, just take a look, even from 2019, if you compare the 9 months ending, the first 9 months of 2018 to 2019, they had 5 billion shares to now they're at 4.6 billion. Then you come look now here, even at this quarter, they're at 4.5 billion. So overall, if you guys don't see what's happening, that's about 400 million shares. If you do the math, 400 million shares at like $200 per share, what is 400 million times 200? It is a lot of money. You could do the math, but now coming into what we were saying from 2015 when this growth really slowed, or even when people started getting affected by the margins, when the MacBooks, not the MacBook sales, but more so the iPad sales started going down, and people are like, oh, how are they going to grow? Who's still buying iPhones? Yada, yada, yada. And again, they said that in 2017 as well, too. Let's take a look at the 10K for 2018. The 10Q, this is a quarterly statement. 10K is a yearly statement. But now, again, here's our shares number that we're looking for. Shares available. So this is just calculating pretty much at the end of the full year. You could see in 2014, they had 6 billion shares. 2015 now, they had 5.7, but then what started happening there? 5.4, 5.2, 4.9. So again, we saw they're at 4.62, so they've already dropped another 300 million. But if you pretty much notice, the stock has gone up literally now since the last time we thought growth was over at like 128 or even down to 80. They've went up more than 100%, even 200%, really depending on the price you want to calculate it from. But it's pretty easy to see a contributing factor could be the share buyback, because this has almost dropped 50% since then. To go from 6 billion shares to 4.9, that's a big difference. So again, I'm bringing this up because I think this is all relatable here with the direction of Apple stock, and that's what I'll bring up the last point, not here, but then this next thing now, what we saw with the event, what we're seeing with this Apple TV thing. And I think the Apple TV thing is honestly very important, because I think this is pushing them into that Netflix territory where, you know, it took Netflix time to start out, but if they can get into this area, it's going to be good. But what you're seeing, they said in 2019 when they cut guidance, they're going to start focusing more on the service sector and pivoting towards services as opposed to hardware, which again, they've been selling iPads, iPhones, MacBooks. That's hardware, physical devices. When now they're saying we have this giant iTunes store, we have all these users, we have this. They're now monetizing it. If they even just get 70 million people to sign up at $5 a month, that is insane. But it's actually looking like what they've said from when they're doing it. It looks like this service sector pivot is working, and it's working without bringing in too much pain. And if this keeps working, it is going to be nuts. Adobe did something similar. Microsoft did something similar. There's a bunch of companies that did this. Some suffered more pain than others. If you guys remember, Adobe, you could have pirated it off of torrents. Microsoft, same thing. It used to be the disk. Now they sell everything as a service. They'll sell system as a service, SaaS. Now it's $10 a month, $20 a month. They can't pirate it. It's always updating. It's this cloud. Amazon did the same thing. Once you pivot into this, and if you do it successfully, it literally doubles these companies and skyrockets them. Here is Adobe. You could see they did the same thing around 2014, 2015. They had a little bit of heartaches. You could see the growth wasn't big. Then out of nowhere, as that system started to really get rolling, boom, it changes all of their margins and everything else. And that's kind of what we might be seeing with Apple. And that's what I think is so crazy about this news. From that, I think the next big thing, or the next OMG service that they're going to go after, is what they talked about in their announcement, healthcare. Hence what they were saying with the watch and what they're doing with that. So watch all of that. But again, the fact that that news came out, I'm saying this is all crazy, because not like we don't know about this news, but that's a big move. And if they execute and it works, it's going to have a big effect. And lastly, the news like the bonds and Bob Iger, even today, literally right here after market, Disney CEO Bob Iger resigned from Apple's board as the companies come into conflict on streaming. So even if you just saw the headline, even if you saw the news, I'm glad CNBC's adding that to the end there. It didn't actually say it in the filing that they were leaving because of this, but people have drawn 2 and 2. Apple has kind of even downplayed this whole connection in the past, but at the same time now, even the same thing happened in 2005 with Google CEO. He was on the board. He left because when they were going to release the Android phone, and it looked like there was going to be competition. So now this is showing something, and I think this gives all the more weight to the power of what this streaming service could be and really what this means. Because again, when Disney came out with it, that had its own implications. And again, I could only imagine what it means for the companies like Netflix and Roku and Hulu. But I think this is a piece of news that some people are like, I don't know if this is important or not. But I think it's hinting at something, and I think I think they're definitely going to start taking this stuff really serious on Apple's end. So there's that, and then there's also the news that the bonds. If you guys remember, this was just a few days ago, and this is why I'm saying all of this is crazy, because most of everything I'm talking about here, except for the buybacks, but this announcement of the streaming, the trial, the Goldman, the rebuttal, the Bob Iger, this has all happened in a 1 or 2 week period of the stock. This is insane. They announced they were selling $7 billion in bonds. And again, this kind of relates all back to everything else I was saying with the buybacks. If they could sell those bonds, I think it's at like a 1.7% interest rate is that they're offering. If you could buy those back, and then in the course of 4 or 5 years, you're going to buy your company's shares, and those are going to double up and go up more than 50%, or now with the streaming service or everything, they could literally sell bonds and sell debt to buy back their own company and make more money investing in themselves or reinvesting through what they have. You know, they are a cash and money machine. So this did still take me longer than I expected, but that's that. And really, here's my conclusion and summary of all this. I think it's going to get easy to sleep on the biggest company in the world, even though they had $1 trillion in this. It's easy to say, you know, it's the story's over, this and that, but I think history's kind of repeating itself, and it has some upside. As a long-term, I kind of like this, and even in 2015, I kind of felt like, it's a little too late. I'm going to be looking for some of the dips here and the opportunities, but overall, what you could learn from the finances is one thing, but I think this is all crazy news, and I think Apple is gearing up and getting ready to pivot towards something nutty, and I think they're going to be probably one of the stronger companies. So none of this is a financial recommendation. Please consult with a financial advisor. Educational purposes only. I do own some shares of Apple. However, this is not a recommendation. I do not plan to sell them anytime soon or in the near future. The Colt loves you. Make sure you subscribe. Drop your thumbs up on the video. And let's go. I'll see you on the weekend with the rest of the videos. Goodbye.